Well, hello class, and welcome to week 2 of BACC 531 Managerial Accounting. Hope that each of you are doing well, that your week is off to a great start so far, and that you're also off to a great start in our course together in BACC 531. This week we're going to examine content from chapters 2 and 3 of our course textbook, exploring job order costing in relation to calculating unit product costs, and analyzing cost flows and external reporting considerations related to job order costing systems. Job order costing systems are designed to facilitate cost analysis and tracking on the basis of individual jobs. A job consists of a product order from a customer and usually is made according to particular customer specifications. Thus, job order costing systems tend to work well for businesses that provide highly customized products according to individual customer needs. For businesses that provide large volumes of homogeneous or similar products, such as laundry detergent like Tide Pods or candy bars such as a Hershey bar, those types of organizations will typically employ what are called process costing systems. We'll explore process costing systems together in a future chapter. Job order costing systems thus focus on accumulating, analyzing, and managing the three basic types of product costs according to individual jobs. The three basic types of product costs consist of, first, direct materials cost, or the cost of the raw materials, or you might think of it as the raw ingredients that go into a given product. Secondly, it also consists of direct labor costs, or the costs of labor that's directly working on converting the product in question into a finished product. And then thirdly and finally, the cost of manufacturing overhead. Manufacturing overhead constitutes the indirect costs of manufacturing, such as grease that keeps manufacturing machinery and equipment lubricated, or the cost of certain utilities, such as electric that powers a manufacturing plant, or the cost of water, or other resources that eventually are going to flow into a product or into the manufacturing process, but are not as easily directly traced as direct materials and direct labor. The first two categories of manufacturing costs are together called direct costs, that is, direct materials and direct labor, or they're also called prime costs. Those terms are synonymous because they flow directly into the cost of individual products. The third category of manufacturing overhead is often referred to as indirect cost because these costs, while necessary for manufacturing to produce products, they cannot be traced directly with the same degree of ease to individual products. It's important to note that with the current state of technology, virtually any cost component of manufacturing can be directly traced in some way to individual units of product with varying degrees of precision. However, under the cost-benefit constraint in accounting, manufacturing overhead costs will be allocated using a calculated estimate rather than being directly traced. The cost-benefit constraint is a pervasive constraint, meaning it governs everything we do in the accounting realm, and it reminds us that if something costs us more than the value or the benefit of the information we derive from it, then it simply doesn't make sense to do it. Put another way, if trying to get the information in question will end up bankrupting your company, it's not going to benefit you in the long run to get that information. It's not logical to pursue it, even if it's possible. If the costs of that information doesn't justify the benefit derived, it's not logical and it doesn't make sense. That is why we will learn the valuation methodologies or the allocation mechanisms that you'll study in this chapter for how we allocate overhead. We will calculate a predetermined estimate, an overhead rate, that we will then multiply by some unit of driver to get an estimate of the overhead to be applied to an individual job and ultimately to each individual unit of product. The reason we use those estimates is not because it's not possible to directly trace manufacturing overhead. It is that the cost of doing so doesn't justify the benefit in terms of information derived. A final grouping category of production costs is also referred to as conversion costs. Conversion costs as a category consists of direct labor and manufacturing overhead. We call these conversion costs because they constitute the cost of converting a given amount of direct material into a finished product. I often ask my undergraduate cost accounting students when I'm teaching these concepts about the idea of how something becomes a final or a finished product. Even if you gather together all of the materials or the ingredients that go into it and pile them together in the same workspace, they don't just magically combine into a finished product. They have to be combined in an ordered or on an ordered basis using the benefit of both labor and the benefit of manufacturing overhead such as machinery and equipment that are combined together to convert those materials through an ordered process into finished product. To illustrate on a more personal level, thinking about baking or cooking something from scratch in your own kitchen at home, maybe a cake or a batch of cookies, this serves as a helpful illustration for thinking through these cost categories and the concepts that we'll explore. The ingredients for whatever recipe you're making, such as sugar, flour, eggs, vanilla, or butter, those constitute raw materials. Think of that as direct material that's going to go into a product. The value of the time that you personally spend in the kitchen combining, mixing, preparing, and then baking or cooking those ingredients into the finished product is the conversion cost component of direct labor. That is, if you were to pay yourself a wage for the time that you spend in your kitchen. The cost of the equipment that you're using to make the cake or the cookies, such as the depreciation costs of the mixer if you're using a mechanical mixer, or the cost of your oven, the utensils that you use in your kitchen, as well as the electricity and or the propane that powers your equipment and those goods in your kitchen, is the manufacturing overhead component of baking the cake or making the cookies in question. A job order system simply uses the process or simply constitutes the process of collecting and accumulating those three basic groups of costs: direct materials, direct labor, and manufacturing overhead, and then allocating them to the individual units of product within a given job to determine both the overall job cost and ultimately the unit cost of each individual unit within a job. Sometimes a job might consist of or be a single unit of product that's made. Sometimes it might be a few or a handful or even a batch of products within the job. But the key is we need a total job cost, again the sum of direct materials, direct labor, and manufacturing overhead, and then we can simply divide that by the number of units within the job in order to determine the unit cost. So all of that considered, in Chapter 2, you're going to learn to compute a predetermined overhead rate, to apply overhead costing to jobs using a predetermined overhead rate, to compute the total cost and unit product costs of a given job using the plant-wide predetermined overhead rate, to compute the total cost and unit product costs of a job using a second approach known as the multiple predetermined overhead rate approach, and then how to use job cost sheets to calculate ending inventories and the cost of goods sold. In Chapter 3, our second chapter for consideration this week, you'll learn to understand the flow of costs in a job order costing system and how to prepare appropriate journal entries to record costs using T accounts, to show the flow of costs in a job order costing system, to prepare schedules of cost of goods manufactured and cost of goods sold, as well as an income statement for job order systems, compute applied or underapplied and over-applied overhead costs, and to prepare the journal entry to close the balance in manufacturing overhead to the appropriate accounts as necessary, and also how to use Microsoft Excel to summarize the flow of costs in a job order costing system. To get started with your assignments this week, I would first encourage you to view the narrated PowerPoint slides and the concept overview videos that are provided in the Week 2 folder. After reviewing those materials, you'll then need to complete the Week 2 reading assignment, the Week 2 lecture video quiz, the Week 2 exercises, and finally the Week 2 data analytics assignment. All four of these assignments will be completed through the McGraw-Hill Connect learning platform. You can click the links in the Week 2 folder to access or to gain direct access to the assignments. Alternatively, if you've set up your McGraw-Hill Connect account, and I hope you've done that, then you can go directly to Connect and access them there as well. Usually it's easiest to go through iLearn, the Simple Weekly folder and click the links that are provided for you there. If you have any questions as you journey through the content this week, please reach out and let me know. I'll be glad to help, and you can reach me by email at jake.brock@ucumberlands.edu. I look forward to hearing from you, and once again, welcome to Week 2 of BACC 531 Managerial Accounting. Thanks for watching, and have a fantastic day.